Nick, how you doing?
I'm doing great, fellas. How are you?
Hey, not too bad. Were you are you getting down dirty for these Apple earnings here tonight?
I'm on the sideline for Apple. I don't, it's a coin flip. You probably heard me say that earnings is a complete coin flip, even if I have their P&L ahead of time, because you never know
That's
how.
true too. It's a great
Serious?
point. They
Yeah,
always want to prosecute all these insiders. You got inside information on the earnings report. Sometimes it's really hard to gather whether the stock's going to go up and down from it or not, though.
I always bring up, remember when Google reported and it was Sergey's first day back or first earnings back, and he had this throat issue and he only spoke like 130 some words and they sold it $100 because they counted the words and they didn't like how many words he said. So you never know how traders are going to react. So you can pin the numbers exactly, yet fail to guess how the street is going to trade it. So it's a complete coin flip. Anybody who tells you otherwise is mistaken.
But Nick, I mean, come on. Look at the trifecta of good news that came out with last time. Is there any way that they can replicate that? They blew the numbers away. They raised guidance. They bought back stock. I mean, how are they gonna replicate that? That's the only
Seven
way.
for one stock split.
You,
Yeah,
you,
I forgot
I'm on
that.
your side. If I were to guess, I'd guess lower. The options market is guessing lower based on the weeklies for Apple this week. So
Do you know what the straddle's going for? I shouldn't even ask because last time I sold the straddle and got killed on it, so I shouldn't even ask. But
I,
do
I
you
would
know what
not.
it's going for?
I did not look, but I would not sell the straddle.
I
If
gotta go
anything,
look
I'll,
it
I'll
up.
I'll take a directional position on it, and
Yeah.
if I wanted to play it, I'll play it to the downside.
Hey Nick, when Dennis got smoked on that straddle last time, no, Dennis, I'm trying to
I
make the.
did. I did. I did. I got
That's
smoked on
like
that straddle.
I'm surprised you even came on the show that day. I mean, no, but you mentioned something that he could do to mitigate the risk when you do something like that. And what was it? Buying an out of the money call and an out of the money put too, or was that you mentioned something that obviously he didn't do? Could you just refresh my memory on that?
I'm failing to remember myself, so it must have been a great strategy.
Don't sell straddles.
Yeah,
No, you
that's what I said.
Ahead of stocks that report seven for one stock splits.
Yeah,
no,
that's
Nick,
what I
Nick.
say. Don't sell the straddle. I mean, selling premium at the earnings when you have an event that's this wild is great if you can pin it. But the losses almost erase all the winnings that you get. It's really hard. I mean, it's a sometimes you get muted responses like Netflix sellers are making a killing this morning because everybody expected a wide range and it was 435 to 470 yesterday after the hours. But then I said, they delivered the biggest good news I've ever seen in Netflix, which is they actually had hard deadline dates for, getting into big European countries. And I thought it would run $30 on it. And it popped. And then now we're looking at a red open for it. So not looking good for Netflix. But whoever sold, um, credit, an iron condor, say, with a good buffer, is the premium is going to be gone and they're going to pocket it for almost maximum gain right there.
Yeah, I think it
Or
was
it
going
all. Oh, I was
36
gonna say
bucks. It was going off at
the Apple straddle. I did just price that. Sorry,
Six
Joel.
bucks. Yeah. To me, it's not worth the hassle. It really isn't. I'd rather see the numbers and then trade it afterwards with a little bit more clarity.
So, Nick, I know you were kind of sitting on your hands here and waiting to see about the CPI data here. It seemed market seems to like it so far, bumping up into this resistance area again. The S&Ps. We've been talking about this with you when you come on the last few weeks. This entire 1976 and 1978 and a quarter, 78 and a quarter being the all-time high. Boy, I mean, this is like the fourth or fifth time up to this level. Is it still you still try
It,
it from the short side and
it,
reverse if it goes through, or how you playing it?
I am playing it from the short side. I'll tell you why. All the pops we've had have been relief of something. Over the weekend, relief, maybe the world didn't fall apart, or last week. Today, it's relief that they handed over maybe the black box and no more major debacles. Yesterday, some relief from President Obama coming out and not saying that he's going to add. So any pop we've had is relief pop. So it's shortable. anytime we get a pop, I sell credit call spreads, which are bearish. When you sell a call
Yep.
and then you buy a call behind it higher to limit your risk and limit your potential profit. But I'm not doing it at the front lines like I've told you before. I go up higher and out. I'll give you an example. On the pops, I sold for the members a December 1260, 1270 credit call spread in the RUT, which are small caps, and collected over $2. And I believe I have some members that collected $3. So they're risking $7 to make three. The risk reward is great. Some people don't see it that way. I do. It's like an 80% chance to win, and you're collecting 3 divided by 7, and that's your percentage return. Who wouldn't want that? And sure enough, we closed it for a good bank, and I didn't wait for it until December. Now it's $1.70. Yesterday it was in the 60s, so to close. So you keep the difference. I did the same thing with an August play, and actually with a July play for me, but an August play. So I'm doing them far away from trouble. So if the market runs up against me, I have time to react. I shorted the October contract in the SPX similarly up at 2080. So let them break 2000. I don't care. I'm up there at 2080 and I'm collecting 95 cents for it. So you can short it. You don't have to be at the front lines.
We got gold doing a little bit of a rebound here right now too. Nick, what are your thoughts here on gold?
Gold has been a mystery. I used to trade the GLD, but then I found out that it's in the hands of a few, and it really moves wildly some days that you can't. You'd have a beautifully developed strategy, and somebody will blow it out because they're liquidating for countries, and just above my pay grade, to tell you the truth. Technically speaking, it's got a nice uptrend. I see it, and as recent, I should say. But it's wild, and I don't get the premiums for it, so I tend to not to trade it. In theory, gold should be going up, up, up and away because we get less of it and it's harder to farm. So why doesn't it? That tells me that it's a rigged market, or that's not rigged. It's a nicely organized market.
Yeah, Fari, when we had him, when we talked to him about gold, he feels the same way about the gold futures as well. That they're just kind of let's just say maybe it's not an even playing field. Have you been? Are you getting involved in the Bill Ackman, Carl Icahn? I guess battle. Is that something, or is this too much news for you?
On HLF, you mean?
Yeah.
Well, I watch it. I've traded it with Lotto, meaning I don't put premiums at risk. I just buy, puts or something. And whoever bought puts last week made a killing, right?
Oh yeah, oh yeah.
If my experience, if there's smoke, there's fire. I'm sure Bill has some good points. I'm not sure if the whole company is fraudulent, but if it smells rotten, I mean, there's something rotten about it. So if he can go on public television on the global platform and make these claims, he's not going to make them without some sort of a validity to them. So maybe he's making them more obvious or inflating their gravity. But if there's something there. And yesterday is had a big puke. Those candles are just hard to trade. If you're not on board the short already, you know what? I don't know if it's too late to short. I mean, for a lotto ticket, why not?
I just looked at the options there on the HLF for this week's expiration. The 55 calls are going for $2.65. The 55 puts are almost $4. So you're looking at $6. And this is obviously before the move today, so this would be on yesterday's pricing. So basically, Strauss, $6.65 for this week. So they have given it some premium if you are playing options there.
But they should also be reporting soon, correct? Last year.
Did they report this week?
No. I don't think so. Last year they reported on the 30th, so they're probably slated to report here soon.
Okay. But yeah, so obviously Ackman has put some premium into these options here, so we're going to find out in just about a half an hour what he has to say.
That would be a good lotto ticket. Let's flip a coin and take a side and buy some spreads in them. Just as a lotto, throw $100 on it. Why not?
It's funny because you're talking about these big movements in stocks, and Dennis, when we were trading in the Bright office together, there'd be a stock that was up $5 and then maybe down $5 and then maybe up then unchanged. and we had guys in the office that were longed and lost money, that were shorted and lost money. I mean, it's just, they were like, well, someone. I mean, if it had that kind of movement, we were playing it both long and short. Someone had to make money on it, and
Market makers.
yeah, there you go. There you go.
It's funny these days. We've got all these wild moves, but we really have well-defined ranges. So if you can sell premium outside those ranges and keep a good eye on it, you can make some money instead of trying to go all long and all short. I keep talking in my write-ups about shorts and longs, and if people get the impression that I'm either this side or that side, but I'm not. I flip-flop because I sell spreads, and ideally I want to sell an iron condor, so it makes me both long and short at the same time. So I just play both sides of the fence, but nothing. These ranges are pretty well defined for a set period of time. Remember when 1900 was a wall and everybody was shorting it,
Yeah.
and then the bulls got yelling, and then boom, we went through it, and all the shorts got caught. And I think they're still caught. They keep rolling these positions up and up. That's why the 1950 still stays in play, because 1900 moved up to 1950, and they're still hoping on the 1950 level. Some of them, the shorts, they got caught. So, but nothing is changing. I mean, a lot is happening, but nothing is changing. We still have a crappy environment. Business recovery is tepid at best. Some of it is iffy, and today's CPI was hot, but still nobody's paying attention to it. So, I don't feel like we're still in control like we were when Ben Bernanke was here. And this is I point the finger at Yellen, the way
Really?
I do, because she speaks and she makes strong statements off the cuff. Like she had that 6 months one. That was a terrible one. Remember, if you don't have a timeline, don't say anything.
Yeah.
You don't say, oh, six
Too hard.
months. It's like, what was that all about? And then next, I forget what she said. And then the CPI, oh, don't worry about it. What? That's the benchmark. So don't worry about it. Tell us something else to follow. You know, so we're kind of like lost now. We're just reacting to news. We pop when there's no bad news or somewhat of good news, and we sell hard on the hard. So today we're up what in the pre-market 7.74 on the small caps, 0.45%
Yeah.
on ES. So now we're back to what a couple days ago. So
We're right back to the highs on
of-
the E-mini, on the
well,
ES. We're right
on
back
the
to
ES,
highs.
yeah, but I tend to watch the small caps a little more than the other ones because it's harder to move, and it actually represents many more stocks as opposed to a couple of heavyweights in the broader indices where if Microsoft has a good day or if Apple or Google have a good day, then the whole index is lifted. So the small caps are a truer tell of actually risk appetite, in my opinion, and that's why they run faster up and down. But yeah, we are close to the highs, and the options market is saying that there could be some resistance here, especially on the Qs. The options market is expecting some good decent resistance at 96 and 97, which was where we're at right now.
Hey, Nick, we got about a minute left here, and you mentioned it a lot, and it's a sophisticated option strategy, but I think people should know it and keep it something in their repertoire. If you were doing an Iron Condor in Apple right now, could you just quickly walk through that for us, the strikes and what you'd be doing at what strike prices and what puts or calls?
Can we use something other than Apple
Sure.
because that
Want,
would lead people into doing it into earnings, and I do
want
not
to
want
use
to do that.
Microsoft? Well, that's
No,
earnings,
I'm gonna
though.
I'm
But
gonna
that's
use
earnings
I'm
too.
gonna use Google.
Use
Okay.
Google.
The
Do Google.
Goog, not Google, the Goog, because I
Okay.
just
Okay.
looked at the premiums and there, not the premiums. I just looked at the open interest and they're in my head.
Okay.
So the Goog, if my platform would load it, it's not loading it anyway. This week, that's weird. Okay, so if I expect resistance at 600 in Google, in theory, I can sell the 605, 607.5 credit call spread, meaning I don't expect Google to be above 605 by the end of this week. These are this week's expirations. And for that, I collect 22 cents, let's call it. And I can do the opposite and go sell the 580 or a little lower, 577 and a half and 575 credit put spread and collect 30 cents. So I collect a total of about 50 cents. And now I want Google to stay between 577 and a half and 600 and what I say, 5. So as long as Google stays between these two ranges, then the whole thing expires worthless and I keep the premium.
Right.
So the return is about 11% if it's successful 100%, because I collected 50 cents on the risk of total risk is $4.50. And that's actually, sorry about that. It's less than that because it's $2.50 spread. So the risk is only $2.50.
Yeah, because it can't go both ways.
Exactly. You can't lose both sides. So the margin requirement is the same as if you did one leg. So why not do both if you have clear levels? Now, these are tight levels. I'd rather play the August and go wider. Given that I don't expect any events that are planned for Google between now and August expiration. So why not go lower and higher, collect about the same premium, then you'd be almost within 2 standard deviations as opposed to so close to the line. Besides, if you play with a couple of weeks out, then you have a chance to react if something happens. Like here, if something happens and somebody upgrades Google and Google goes up $20 and the upper leg is the money, you're stuck.
Right. Okay. All right, Nick, we're going to go over that again next week. It's a great strategy, and I think everyone should know how to use it. Thanks for coming on. Have a good trading day. We'll talk to you next week.
Thanks, guys. Later. Bye.
Okay.